If you're a new Canadian thinking about buying a house, you're probably going to need a mortgage. And if you need a mortgage, you probably have some questions. Luckily for us, we have Scotiabank here with us today, and they're going to help us out. Stay tuned. Good morning. How are you?
Hey, I'm doing good, Terry. How are you doing today morning?
I'm doing really well. Thank you so much for doing this. We really appreciate it. And we're actually very excited for our new Canadian friends to get some good information from you.
Definitely. Thank you.
All right. So, to begin with, can you just tell viewers who you are, a little bit about yourself?
Sure. So, my name is Ruhi Malik. I'm from Scotiabank. I'm actually a mortgage advisor with the bank. And I started my career in banking and in mortgages 5 years back with Bank of Montreal. And, currently I am all there help the new Canadians to buy their home. That's like my expertise.
Mhm.
And personally, I am a new not now, but I was almost there a year back. I
Right.
came to Canada in 2017 and as a new Canadian, and I bought my first home at 2019. So I understand this journey as very personal.
2 years. Wow. And you were an underwriter before
Yes,
this, correct? Yeah.
exactly. So
Yeah.
before,
So just for people who may not know the difference, what exactly is an underwriter? What do they do?
yeah. So the underwriters, basically, I'll start with what I do because I'm the one who starts, dealing with the customers, realtors, understanding their needs and what programs or, based on their down payments and everything, where would they fit in with the best solution to their mortgages. Once I
Hmm.
have all the documents and everything together, I see their eligibility, and if they are eligible under that thing, I send it for the approval to the bank credit team. The person who looks into the file approves it, create conditions of what all we would need just to make sure that the customer get that funding on the day of closing. Is He's the one who's called underwriter.
Okay, so and that's a really important point that I think people should understand that you bring to the table. So the fact that so we look at it this way: you meet with clients, you get the information, you advise them, you qualify them preliminary, and you get everything together. That needs to still go to the bank, and somebody at the
Yes.
bank called an underwriter either says yes or no. So the fact that you used to be an underwriter, you have more knowledge, more experience than some other mortgage people, correct?
Yeah. So basically, that experience of being underwriter helps me to know prima facie that what more documents we can give, how we can present the need of the customer in a best possible way to make sure that we get the approval. So I
Perfect.
know what the bank would be looking into.
Right. Yeah.
That helps.
And people might not appreciate that, but it's a big advantage with people working with somebody like you. So that's great to hear. All right. So let's get in. We've got some discussion points here about some programs. So the first one I want to start with is, can you tell me a little bit about what is the new immigrant program?
That's a great question here, Terry, because once a new immigrant come in, they heard the different stories from different people. It's very important for them to know what exactly they can expect as a new immigrant in Canada in terms of home buying process. So there are two things. One, for your first home buying, you can
Mhm.
make a down payment of less than 20%. There is a very simple calculation to it. If you're buying a house of up to 500,000, you can make 5% down. If the house is up to $1 million, like 999,999, that should be the
Mhm.
cutoff. Then for 500,000 to 1 million, your down payment should be 10%. So for
Okay.
example, I'm buying a house of $700,000. For first $500,000, 25,000, and for rest of $200,000, 20,000. So my down payment should be 45,000 minimum.
Okay.
Against anybody else like me or you today who go out and have to buy a house, we have to make a 20% down. That is for a $1 million of for I'll take 700 so that the comparable is easy. $700,000 house, we both would be making a down payment of 140,000.
Right. Okay. So that's a big
It's a
difference.
big advantage because when you come from a new country, you want to hold on to your savings too because you are still settling, right? There
Right.
are times when you're taking help from your family for your down payment, but when you do not have to make the 20% down, the road becomes easier.
Right. And that makes
Yeah.
a big difference, certainly.
One
Okay.
thing I would like to add here,
Sure.
all these applications goes through a government program to get insured. Banks, once they approve you, they send these applications for the insurance approval.
Hmm.
If the insurance, we will always tell you, always tell the customer on the first hand how much they can expect in terms of amount,
Okay.
if whatever. But please remember, in this case, the policies are made by the government officials. There are no exceptions to the amount. So the people, when they put their offers, they have to stick with the amount.
Okay. So
And
if,
the
sorry,
Yeah,
you go ahead.
yeah, and the premium that is there for this mortgage is added to your mortgage, so you don't have to
Okay.
pay it upfront.
Okay, so that's the insurance premium, obviously,
Yes.
right? So just and that's a really good point that I think people need to understand. If you are pre-approved to $700,000, let's just say, don't go put an offer in for 720 and just think, ah, it'll be fine. Correct? The limit is the limit, right?
Exactly, because anything extra you go with beyond the ratios as prescribed by the government to these agencies, you will be putting the money from your own pocket.
Yeah. Now, if you have the money, great. But if you don't, and again, it's not.
Yeah.
Don't try and push things necessarily. It's the law, and there we sit. Those are
Exactly.
the ratios.
Exactly. You
Okay.
don't want any shocks at the end of the day.
Mm, yeah, you have to close because we
Yes.
don't want to get sued. Right. Okay. Next, can you tell me a little bit about the new immigrant equity program, please?
Definitely, I would. There is one quick thing I just wanted to add on the previous
Sure.
one, your new immigrant program, that as a new immigrant buying your first time home, you can withdraw up to $35,000 from your RRSPs. But please remember, without taxes, like if I withdraw my money from RRSP today, I'll be paying tax on it, right? But for
Mhm.
buying your first home, you can withdraw up to $35,000, no taxes on it, but you have to make sure that you put that much amount, you return that money to your RRSP within 15 years.
15, 1 5.
Yes, yes,
Yeah.
which is a
Okay.
great
Yeah.
long time.
Yeah. So and I forget what the numbers are, and that may have changed. You correct me, but I believe I had read something some few years ago. The average Canadian will move every 7 years. So you're making money. You can get it
Now
back
it's,
in 15.
yeah, but now it's getting shorter. Like, everybody want to move up the ladder. Everybody wants to upgrade because families are growing, especially
Hmm.
for new immigrants. Once they are here, they have kids, then, their families might come in to help them with the kids and everything. So the families are growing, and that's why people are upgrading pretty fast nowadays.
Right. Yeah. So again, the 15 years, who cares? You'll be able to pay that
Of
back. No
course.
problem. Okay. New immigrant equity program.
That's the program that's completely opposite, like taking care of the people for whom the money, having a liquid money, is not a problem. The
Hmm.
problem is getting qualified based on income. So the first one, when we were talking about people don't have money for down payment, but they can qualify for a mortgage. Now we are talking about the people who have money for the down payment and everything. Problem is the qualification. The best part about the program is, which be surprising for you too, Terry, anybody can qualify for this program even if they are making just $12,000 a year. And
Wow.
in
Yeah.
Ontario, with the minimum pay, you can expect even somebody who's working in Tim Hortons can do that.
Yeah. What is there a maximum amount
Exactly.
so I earn 12,000. What's the maximum I can purchase?
So that's another surprise in GTA, like in Greater Toronto area and
Mhm.
nearby areas. You can look up to buying a house of $1.5 million.
That that is I, well, I'm having trouble. That's very
It's
interesting.
difficult to comprehend, but
Yeah. So
$12,000 income in a year.
and 1.5 million
Yeah,
up to. Now
but
there
I'll
has
tell
to be a
you,
catch.
but I'll tell you what are the conditions. You
Okay.
should be having enough liquid asset to take care of 35% of down payment, out of which 10% should be from your own sources and 25% could be gifted.
Okay. So we need 35% down. So this is not 5% down. Totally different,
No,
right?
totally different. Now
So
you're the one who has money to make that down.
okay. So for the first one, new immigrant program, we're qualifying on employment wages, but we're new here. We don't have a lot of money yet. This one is totally different. Your income is growing, but just started, but you have lots of money. 10% from your own pocket,
Yes,
from you, and the balance up to the 35, that can be gifted, and we're going to be
exactly.
talking about that in a moment. Okay, so
Um,
35% down. Do we need
and
anything else?
yes, 1 year of mortgage payment, that is principal and interest, taxes, heat bills, approximate heat bills, should be there in your account, Canadian account as a liquid asset.
Okay,
So if
so I earn 12,000. Sorry, you go ahead.
so if I say that your mortgage payment is $5,000, your like
Mm-hmm.
in a month, your taxes are $400 in a month, and I would
Mm-hmm.
say that your heat bill would be 200, like 100, okay, 100.
Right.
So then you should be having 5,500 per month. Based on that, the whole year of the amount that would be, uh, you know, uh, that should be there in your account. 60,000. It would be 66,000. So sixty-six
Right.
thousand dollars additional should be there.
Okay. So I work at Tim Hortons. I just arrived in Canada yesterday. I earn $12,000 a year, but I've got lots of money in the bank. So I can go shopping. I need to put 35% down. And I also need to show the bank that I have 1 year. If I get hit by a bus or lose my job, whatever, I have 1 year of utilities, heat, we have taxes, and we have the mortgage payment, which is principal and interest.
Exactly.
Sounds like a good deal.
Yes, because
Yeah.
banks believe that once
Okay.
you come in, it takes time to move up the ladder. But imagine the people who were well settled in their home country, or who had property, or they had equities in their own country, and they're bringing it here, and now suddenly you're asking them to stay on rent, or they have money in their bank account, and they're spending all that money on rent. What will happen
Right.
down the line? When they
Yeah.
will come to buy their house, most of the money is gone as rent, which is never coming back as equity or anything. So this
Right.
program is basically for those people.
And the other thing is, new Canadian wages grow, right? I mean,
Of
I'm thinking of,
course.
yeah. So I'm thinking of, I think I told you this before, but my grandfather, when he came from the Ukraine, he was a dishwasher. He washed dishes. Didn't speak English. It was on Simcoe Street in Toronto many, many, many years ago. But he had a wife, a kid. He's washing dishes, and then farms and real estate. He did
Wow,
very, very well. But
that's amazing. Yeah.
yeah, it's
I
it's
personally started from a contact center at a
yes.
very minimum wage. And see, we all moved up the ladder because as a new immigrant, we have to start from the bottom of the place because we don't know the place, we don't have the experience, but the bank believe that you will grow as
Yes.
times would.
Yeah, and the other thing is, and I don't want to get too far in the weeds here, but 35%, that's a lot of cushion. If something bad, God willing it doesn't, but if something bad happens, the bank has got a lot of cushion there, right?
Exactly. So the
Yeah.
bank is protected
Okay.
in that.
Right. So, all right. So I just want to talk about this as well because there's a lot of information that might be right, might be wrong, floating out there. What's some advice that you would give a new Canadian about how to build credit?
That's a great question here again, Terry, because that's the question that a lot of people ask me when they are new here, because there are a lot of myths we have to bust here. Okay. If you pay your phone bill, you're not building credit. But if you don't pay it or you're late on it, you're definitely harming your credit. So don't take a lot of phone lines and imagine that you're building your credit. That's not
Right.
happening. Besides, there are a lot of chances that you're gonna bring it down.
Okay.
Second thing, to build your credit, I would say like when you go to a bank first time to open your bank accounts and everything, especially
Hmm.
in the A banks, most of the banks do not offer you a regular credit card. They give you a prepaid credit card. You use it because you have to load the money in it and then use it. You feel you're building credit.
Hmm.
They do not build credit. Only a regular credit card builds your credit. Like
Okay.
Scotiabank gives you a credit card of up to $10,000 if you're a new immigrant.
Wow.
Use that,
Okay.
but do not use
Okay.
complete amount. Use only up to 60%, make regular payments, and try to make the full payment instead of minimum payment.
Okay. So pay your phone bills on time. Pay your
Yeah.
just when you get a bill, pay it and make sure it's on time. It's not necessarily going to help you build credit, but it will hurt you a lot if you're chronically late all the time. Second thing is so the prepaid credit cards like just it's garbage. Well, I mean it's fine, but it's not helping you build credit. You need
No.
the credit card, and you guys, for example, do that as well. The now you also talked about 60%. So what about debt? I'm new
Hmm.
to Canada. I want to get a car and I also want to get a house. Okay.
Yeah, when we are
What do we do?
new here, fancy cars, new phones, it's very enticing. But we have to hold on our horses there because if you're buying a new phone, it's definitely not going to be a part of your ratio. If you can afford it, go ahead. It's up to you. It's up to you. But if you are planning to buy a car, please be
Hmm.
mindful. Any payment towards your car is a part of your, debt. So if I do your application and I write $500 they are paying towards the car in a month, it's bringing down your ability to get a mortgage for the amount where the payment is $500. So that will bring down the mortgage honestly by 80 to $90,000,
Wow.
which is going to be
Okay.
a huge dent. So
Right.
when you're new here and you have it in your mind that you want to buy a house, I would say don't buy a car. Just run your numbers with the mortgage person. Make sure you buy a car in a way that do not make an impact on your home buying process. There are two kind of ratios not the banks, basically for the new immigrants, the insurance companies look at. One is just
Hmm.
based on house and one is total debt. I always advise clients that's technical. It's very hard to understand for a layman, but let your mortgage person calculate. There is a 5% difference between total debt and the debt of the house. Your car payments are, if they are within that 5%, you are not actually making a difference on your home buying process by buying a car. Only buy a car within that payment amount.
Okay. So just so I understand this, and this is not just for new Canadians, this is good advice for everybody. The amount of debt, you earn a certain amount of money every month. And the more debt that you have that you need to pay obligations every month, the less room there is. So if you fill it up with fancy car, okay, the mortgage is going to go down because you're only going to be able to borrow so much money total debt. Is that fair? Is that
That
correct?
is that is very true, Terry. And honestly, that is where we go wrong because when we come to the new place, we try to please ourselves with those things, but definitely making a dent in your home buying process. There are certain things that you can buy that are not part of your debt, but there are certain things like that can create. I was just talking about car. I've also seen people who were in their rental home bought furniture on those deals where you don't have to pay for 6 months, but you can pay later.
Hmm.
Don't do that. They are all part of your debt
Okay.
if you keep
So if
minimal.
you're yes, okay, debt. Okay, so what have we learned here? Pay your bills on time. It's not going to
Yeah.
paying it isn't necessarily going to help you, but it will make sure it is not hurting you. The other thing is, okay, credit card, go and see Scotiabank up to $10,000. I'm sure there's some other things in there, but the prepaid stuff doesn't help. Most important though, keep your debt down. All right. Okay.
And one more
S-
important thing about the
Sure.
debts here, Terry, I have to address.
Please.
Banks do understand that you are new to Canada. If your score is, for example, there are two people who are coming to me. One person has a score of 650. He's new to Canada. Banks look into it's a thin credit. You just came in. They might ask you like additional things. Okay, let us see your, and let us get a letter from your landlord saying that you pay your rent timely. That's not a part of a credit report, but that just show that you pay everything timely, right? So the banks might ask you those
Mm-hmm.
questions because they look into it and they know that it's just a thin credit because you just landed. But if somebody's coming to me with a score of 650, and because I can see there are a couple of late payments, now that's not thin credit, that's bad credit. Thin credit is
Okay.
not going to hurt you. Don't worry about it. Banks have other ways to confirm that you are the person who make their payments timely. We can even use international credit bureaus.
Oh, really?
So
I
yes,
didn't know that.
so
Yeah.
yeah, so imagine you just landed with that 12,000 job that we were talking about. You have money, you want to buy a
Mm-hmm.
house, but I cannot see any credit, anything that you have done here, right? You just landed. I
Mm-hmm.
can use it international credit bureau, and then I know what's your history. So I would request people, don't let your credit go bad. Even if you don't have built anything here, banks are very sensitive about it and they really go over it. That's not a
Okay.
problem.
Well, yeah. Well, that's interesting because I didn't understand there was a distinction between thin credit and bad credit. Bad credit, you have bad credit. We all understand that. Pay your bills, get your debt down. The thin credit is, hey, I just came here. It's not good or
Exactly.
bad. It's just I haven't had a chance to build it. So Scotiabank will take that into consideration and say,
Of
okay,
course.
well, what are some other ways that we can kind of look at you to make sure that you're going to pay the mortgage in essence, correct?
Exactly. So I would say anybody who's new to Canada, they don't have to worry about that. We haven't built the credit yet. Banks are, especially with the Scotiabank, we are not the beacon score bank. We just don't look at score and, make the pile of approved and rejected.
Right.
Every score has a story behind it, and this goes as with the story.
Perfect. Okay. Next, I've got a question for you. I've moved from Pakistan last week, and I've arrived in Canada. I want to buy a house. I don't have enough money for my down payment, but mom and dad said they'll just give me the money. Can I do that? How does that work for gifts for down payments?
Now, for this gentleman, I would have first question is you just came in, so your job is in the place. Are you on the probation period? For example, everything is good at that end. Now we'll come to
Okay.
the down payment part.
All
He
right.
said the down payment is coming from mom and dad. So what's the
Mm-hmm.
amount? We want to see whether he is making more than 20% or less than 20%, so that the ratios will go as per that. So I'll ask him what's the amount his parents are giving. And for example, it's 10%, okay? It's 10% only. I would say 5% has to be from your own sources. Rest can come from your parents. And if your parents wants to give you money, get that money now. Don't wait for closing. Get the money
Mm-hmm.
ASAP. One, situation changes, right?
Mm-hmm.
Things changes in the background. And what if you have put the offer, your deposit is off the line already, whatever 5% you have might be in the deposit. And God forbid something happens where the down payment did not come in, you lose the deposit, the only money that you could have used to buy a house. So get the money
Mm-hmm.
at the first place. As soon as somebody commits you, ask them to deposit it.
Mm-hmm.
In the best
Mm-hmm.
part about that is if the money comes in timely, the earlier the money comes in, less the paperwork banks ask from you for the international money.
Okay. What sort of paperwork? Like, is this
Yeah.
a gift letter? Is that still a thing?
There is just a gift letter that you and your parents need to sign that the gift is not repayable. It's not a loan, it's a gift. There's a difference.
Okay.
Loan you have to repay. Bank has to make
Right.
sure it's a gift. It's not a debt on you and you're not gonna repay. So you and your parents need to sign that letter.
Okay.
And if the money comes in early, most of the times banks just see your bank statement and see, okay, the money is there by the parents and it's lying there. But if you're saying that the money is coming right at the closing, then it becomes a matter of compliance, anti-money laundering and all. Bank will ask you your parents' bank statement, then they have to explain where the money is coming into their bank account. It becomes little complicated on that part. So it's always better to get the money earlier in the process than getting it at the end of the process.
Yeah. And that is very good advice. And I really want people to listen to that. I mean, we had a situation last year similar where the amount of money that the bank wanted to see down, the majority of it, I think I've got this right, a significant portion of it was coming from a family member. There was a death, and the money did not materialize.
Oh,
No mortgage. Okay, we're now possibly getting I don't know exactly what happened there, but you're losing your deposit. It's a whole headache.
definitely.
So get if somebody's going to give you the money, get the money now. Like, it's in the bank.
Exactly.
What advice do you have about, so again, for the gentleman coming from Pakistan, mom and dad are still there. There's going to be some money given. Is it better for our new Canadian who's here now wanting to buy the house? Is it better for him to get the money back in the old home, or is it fine? Can the parents just transfer it to a Canadian bank and it's there? Is any advice there?
So yeah, the parents can go ahead and transfer the money to your, Canadian bank account. Canada do not charge you any kind of taxes on the gift as you receive from your parents to buy a home. So that's definitely all right. The countries like India, nowadays there is a huge tax when they send money to Canada. And that's what
Mm,
people are worried about. So if there is a gentleman who's coming from India, then I would say you cannot send a whole lot from one account. I know that. So either you can split like mom, dad, sister, brother, because banks do
mhm,
not care how many gift letters you are giving.
mm,
If the money is
okay,
there, we are good. That's your one
okay,
option. Second, if you're buying a rental home, for example, it's not a residence, you're buying a rental house,
mhm,
then you cannot use gift money technically. It's not allowed by any bank. And if you still have
oh,
to bring the money from overseas, either you have to show
okay,
it's coming from your own bank account overseas. Like I had money in India and I want to bring it in and buy it. That's okay. I'm not taking a gift from anyone. That's mine. Either you are able to show that by giving 3 months back statement of back home to you, showing that this money was always there, right? So
okay,
three
all
months
right,
money was in your Indian bank account and then you transferred it to Canada and used it for down payment.
okay,
One option. Second, for the rental, yeah, there is another option. Take it bring your inheritance. Make your parents sign the legal paperwork in India and everything about inheritance and bring it here. You may have to pay the taxes appropriately because it is inheritance, but then you can use that money for your rental uh, buying process.
okay. So this is not for a house. This is you are buying your first investment property, rental property. So and you are the ultimate origin of the money is mom and dad in this scenario. So mom and dad give it to you in India. You leave it in your bank account for 3 months. Then you bring it to Canada, or it's an inheritance. You pay your taxes, do whatever, but leave the money in India for the 3 or 4 months, whatever, and then you can transfer it over. Do I have that correct? Is
Exactly.
that right?
Yes. In that case, you
Okay.
might be paying taxes to Indian government. The reason is because they're charging every one who is trying to blow like if the amount is over 700,000 rupees, $700,000, not dollars, rupees, from
Hmm.
India to Canada, they are charging you huge tax. You might be paying them the tax, but here it's okay. You can just bring the money in and use it. If your
Okay.
parents have sent it to you directly, there could be a scenario where the parents have sent you money directly, right? For example, I give you a personal example. My parents sold the property in India. They
Hmm.
want to give all their kids some money because they sold the property. I want to use that money to buy something here. I want to build some asset here, like a real estate. Once I get this money, I cannot just go and buy a real estate with that money. I put that money in a GIC or something. Okay.
Hmm.
Once that money is there, I will take some time. I will take 6 months or like 3 to 6 months basically, and then start my process. So the bank knows the money has always been here and it's my own money,
Mm.
right? The whole idea is that, we do in Canadian scenario, we understand that the parents give money or the parents help you or your siblings to buy your first home, like so that you have a place to live. For rental
Mm,
properties, it's not very justifiable to the bank that the parents are giving you money as a gift, right? Because that's an
mm.
investment, so there should be a vested interest in it. Now they are not on title and you're not giving the money back, then why? So this is one of the ways that these are a couple of ways actually through which you can get the money here to buy a rental property.
Okay. All right. So I think the best piece of advice is if you have any questions about gifts and strategies, just call Scotia, right? We're
Just call
just
me.
just call Ruhi. She'll take
Yeah,
care of you. It's good. That's the way. All right. So just in closing here, any sort of general pieces of advice that you have that you'd like to share with our new Canadian friends?
of course. Thanks, Terry. And I would say one piece of advice that, suffice everything that we talk about would be from my very own personal experience. Start your journey with a very compassionate and a trustworthy realtor as you. For me, I would say it's you, Terry, because when you come to the new place, you don't understand construction, you don't understand homes, you don't understand how and what builds the equity, right? I honestly, when I came in, I didn't know whether a good kitchen would build more equity or, having a basement do, but there is a realtor who is like having your back,
Hmm.
who knows everything and will make sure that you go into the right house. It's going to be your first home. It's going to be a big investment in a new country. So my first advice is also always start with a very trustworthy and compassionate realtor. Don't go by his friend, that friend.
Yeah.
I personally know you, Terry, so I know how much heart you put in every decision your customers make, how personally you take it. That is the first step of buying house process.
Right. The and that is a very good piece of advice. I know it's self-serving, but I just coincidentally had a phone call yesterday with a gentleman. I have done 7 deals for their family. Like the cousins, I won't give their names,
Wow.
but the first guy came over 10 years ago. He's like mid
Wow.
20s, and they did a deal um uh 6 months ago, seven, no, maybe about a year ago. And they listed their house that I had actually sold them. And which was fine. It's a free country. You do whatever you want. But what it was their father's friend from the old his kid got a real estate license, had no idea what he was doing, out of market.
Oh,
And so I got a call very sheepishly saying, Terry, I apologize, but so we got it figured out and it's fine. So again, that gets somebody who knows what they're doing on the real estate side. And I'm going to flip
exactly.
it back as well for the mortgages. You do not use somebody that you found on the internet by accident. You get somebody who's good and knows what they're doing. And if you're new Canadian, Ruhi, you came here in 2019, you said 17.
17, I came
You
in, and in 19 early, I purchased my first home.
Yeah, okay, so you've got a house. You also have
We
I
have a
shouldn't be
rental
telling you.
property that I bought in
Okay.
2021 then.
All right. So I'm looking in the camera, you're looking at me, you're watching this. This is a lady you use for your mortgages. Hands down. Okay.
Thank you.
So, all right. So to that end, we're going to have both of our contacts, emails, cell phones, all that good stuff down in the description below. I thank you very much for watching. Rui, do you have anything else you'd like to add?
No, this was enough. But if there is any questions you may ever have, please feel free to get back to me and Terry. We just love to help, and I think we both are somebody I've seen. We are really happy to give out the advice and help people, right? So just get back to us anytime you want.
Absolutely. Thanks for watching,
Thanks.
everybody. We'll talk
Bye.
soon.